But as promised, here's Enam Group's Manish Chokhani expanding on the untapped potential of the Indian economy and also explaining what's holding back consumption. This chat, of course, he had on the sidelines of the India Economic Conclave 2019.
We love to think of India as this big, bottom of the pyramid market where there's so much of potential and so on. The reality is we look more like an obelisk, where there's a very, very large base, which is really like Africa, and we really don't have per capita income over there. And the top end, with the so-called rich in India, are actually not really rich. We're like the average Mexicans. So when you think of people owning cars and they're called the rich people, and you think of people owning air conditioners, they're basically per capita income levels resemble that of Mexico. And you shouldn't be beating up people for owning a Maruti car. It's certainly not a luxury car. And, Akash is in the first row, and we often joke about this. I just want to take a quick audience poll on how many S-Class Mercedes do you think is sold in India? People complain about this country being rich and the rich exploiting the poor and so on. Do you know how many S-Class Mercedes cars are sold in India? In the full year, 300 cars. It's shocking for a country of this size with things, we have a big market and so much of wealth. It's not really a big car market. It's Marutis and Hyundais which are kind of dominating it. And there's a slide, again, I'd like to spend 2 minutes, it looks a bit complex, of thinking about the future and also the disappointment about the present. That if you'll focus on the yellow line, the yellow curve, is where consumption was in India in the year 1990 when I started out. In the year 2000. Lots of people with low incomes sitting on the complete extreme right of the chart, and very, very few people in the middle class and almost non-existent rich class. And the consumption categories we've cut were, if you take from the bottom bubble where the mortgage number is given of how many people are buying homes on mortgage, and let's just take that as a $100,000 home. The next category of bubble was a $10,000 car, and the third category bubble was a $1,000 consumer durable, your AC or your fridge or your mobile phone or whatever you call it. If you see where consumption was in India in the year 2000, as recently as that, 500,000 air conditioners sold in a country, and it's a pretty hot country. Then, as in theory the country progresses, you go to the red line at the bottom, where a few more people come in and they can start consuming. And you go from 500,000 ACs to a grand total of 2.5 million air conditioners sold in India. And even today as we speak, and these were numbers, I just kept it deliberately of what the forecast was, which we guys used to do 10 years ago, and the basis on which a lot of investors take bets in India. We had hoped we would reach 18 million air conditioners. We are probably close to 6 million. Similarly, we were hopeful we would sell close to 12 million cars. We are barely nudging 3.5 million cars. We are hopeful of crossing 35 million bikes, two-wheelers, which is where China peaked many, many years ago, and now they've dropped off as they've all migrated to cars. We had barely 20 million bikes and so on. And a stunning statistic for a country which is a $3 trillion economy with a 25% saving rate. So we save $750 billion a year. And we claim we put half of that into real assets and not financial assets. So there's $375 billion of money going into real assets, which is property and gold. Although I disagree on the gold, but let's say there's $300 billion going annually into purchase of property in this country. The aggregate stock of mortgages outstanding in this country is 240 billion. So people are not going out, taking a mortgage and buying home. They're still going and buying it cash down. And the issue in this country is that we're not able to monetize all that land and bring it into productive use by, in a sense, financializing the economy. So the consumption has really disappointed, and a lot of consumer stocks which people complain about are priced very high are actually looking at the J curve. If eventually we do climb that ladder and the Africans become the Filipinos and the Filipinos become the Mexicans, then there is fabulous amount of consumption still available in the country. And therefore you should be 10x, 15x larger in most categories than what you are today. And that's really the reason to be, as investors, you tend to be optimistic and look at it as half glass empty rather than half glass full. And that's really where we stand today. 8 companies or 7 companies are 25% of India's total market capitalization. It shouldn't be surprising. A lot of them now service sectors outside India, as well as straddle sectors. The next 18 or 19 are probably the next 25%. So in 29 companies, you pretty much got half of India covered. So when you're expressing surprise at why is this market so high, it's really these companies. And they ought to be, because they've climbed to the top of the obelisk and proven themselves against the best competition in the world. It's not a surprise. Just visually, that's what the companies look like. A lot of them still dominated by basic materials and energy. A lot of, obviously, wealth being created in the last 5 years in the banking, financial, insurance space. Consumer stocks are valued very highly, but I'll show you on the next slide, profits are still quite elusive over there. And then, of course, the big telecom and tech stocks, although telecoms had its share of troubles recently. Just if you hold the figure in your head on the left, 21% of market cap is energy, materials, utility. But in terms of profit, it's 38%. So if you need to create cash flow to allow people to invest and start the investment cycle, while we may love the consumer sectors and the tech sectors which aren't yet producing that level of profit, there is no choice but to go down that path and, in a sense, revive the whole manufacturing environment in the country. Just quickly jumping ahead, because we don't only think old economy, we are rising. Rajan's coming and he's going to speak a bit later about the new world which is coming up. We are rising over there. A good slide which says, we are already number 4 on the list of unicorns coming up. We've produced 4 or 5 decacorns, which are $10 billion companies from India. So clearly the talent pool is there. The opportunity is there. The sad news is bulk of these companies are already held by foreign investors. So you're not going to see the wealth creation happening here. So even, for example, when Flipkart was sold for $15–16 billion, bulk of the money went to Singapore. It didn't really come into India. The Prime Minister has put out a vision of all the kinds of things we love to hear, and we love, if they would all come true. Especially as Mr. Agarwal was saying, point number 10 was this big mantra of minimum government and maximum governance. If we got there, life would be hunky-dory for all of us, and I bet you the economy would have been doing well by now. So they have done all these things, and I, again, won't dwell on it. You've got these structural reforms of IBC, GST, real estate code, and so on going around. They have done the right things in terms of putting a digitization program, getting the whole social inclusion program going, and so on.
That's Manish Chokhani talking about the India demographics when it comes to consumption and how the landscape actually pans out.